Good morning and welcome to today's edition of the London Session Open. It's October 22nd and it's almost 7 a.m. in London when I'm doing this market update. Let's take a look at the markets and we're going to begin with the euro. I'm going to provide you guys with my view on the markets and the levels which I think matter for traders, and hopefully this can support you in your own trading. Okay, let's begin here. So euro versus the dollar. The market did go down a tiny bit yesterday, and I was hoping for it to trade slightly lower. Went as low as 37. I wanted to trade down to 32 to then turn bullish from here and see this go upwards. Unfortunately, we missed that out, and the market is slightly higher. The market has been very strong over the last few days, as you know, and it's all because of Brexit and the market getting, I think, people being short pound, and at the end people bought back those pounds and they sold their dollars, and that caused a ripple effect, because you can see New Zealand dollars also higher, Aussie dollars also higher. Overnight as well, we saw the comments from President Trump, and as well comments from Mr. Li Sheng, from which is China's vice foreign minister, and he also said that some progress has been made. President Trump said that the trade deal with China was coming along well. So on both sides, saying things are progressing, which is good for risk appetite, and that's also another reason why we're seeing the dollar weakening the way it is. Stock markets as well, as you know, they're quite strong. So the trend again remains bullish about 110.99, and we have last week's high, and then you have this high up here, which is the August 7th high, and you have some smaller highs here like this one, which is not smaller but just before the 13th. But around this level, that's where the market could potentially go, I think, and trade to that level, the way things are looking right now. And if you look at this in the short term, again, I would rather stick with just being bullish, but it has to be from the right level, and I think 11.32 is the spot. Of course, it might go upwards without the market actually trading upwards, but yeah, it's important to have the risk reward ratio to our favor there. Let's move along now with the pound. So this is the pound versus the dollar, and the trend has been very good and strong here, as well as, had some very terrific days since the market bottomed out here at 122 on October 9th, and it's gone straight up, and that's pip wise a move of about 789 pips. This is one of the reasons why I started to look at Forex, and like Forex, it tended to have very strong moves like this one, and it used to happen quite often, but over the last year or so it has been quite boring, with the exception of sort of these events here. So it's quite nice to see that things are coming back after being quiet pretty much since August here. August, probably say June, since of last year. Now looking at this today, the best strategy here many times when the market sort of goes a bit crazy, as I would call it, and it doesn't really pull back, is just to go with the trend for as long as possible. So the job of the trader is just to figure out which is the important stop level that people are going to be using and where might they be buying. And that's what I've been trying to do lately, but we sort of missed the entries, unfortunately, because the market has been a bit too strong. Now, if we just look at this, you have this, which is a nice and well-defined swing low. So I'll make that my trend finding level. And then if I take Fibonacci from the low to the high, this is the first fib. So around that fib could be the first level to be looking to turn bullish. You also have that high here and that 50 level, which is where I prefer. I think in this little spot between the 50 level at 128.79 and 128, that the market might actually turn bullish from these levels and potentially go higher. Here as well, if we just go up to the prior high, you get a 1-to-1 risk-reward ratio, and that's really important. Risk-reward ratio is very, very important, and we need that to make sure. We don't always have to do it. There's strategies where you just make a few pip, but at least a few pip each time when you win, and then when you lose big. But my experience overall when I seen that is that it tends to lead to a few good months of trading, and then you just get a margin call and you need to start from the beginning. Having a decent risk reward ratio, at least a 1-to-1, makes sure that you'll usually have big gains that would cover from any losses. So it's a bit the other way around. There's a lot of pain, but then once in a while you get some very good trades, and that generates enough to cover for all the losses. A 1-to-1 though is actually rather neutral, so you know. Here as well, there's supposed to be a vote today, so it's one vote about the general sort of idea and principle of the new Brexit deal. That's going to happen around, I think it was around 9 p.m. London time. They usually debate a lot and then they vote. And then it's not just one vote and then they're done. They have broken up the deal, and as well opposition and so on wants to add two things. One is to attach a referendum to it, which means that they will vote through the deal if it has a referendum attached to it. That's something that Labour has been saying, that let the people have a final say on the deal. And then you have the other part, which will be if the EU is going to belong to a permanent customs union, and that will sort of defeat the whole purpose of Brexit, and that the UK can go out and strike its own deals. So people say if that would be voted in, and that amendment, then it's going to be a situation where probably Prime Minister Boris Johnson would prefer to just push for a general election, which can happen before Christmas. Let's move along here. This is the dollar versus the Japanese yen, and as you know, I've been saying that around 108.46 I think the trader's going to be buying. We reached that level, but we haven't really moved much. I mean, we haven't really moved far away from it either, right? If you look at it from a daily chart, it's definitely a bit of a struggle for the market. It's almost overbought here on October 15th, and not much has happened. And obviously in GBPUSD, there's no doubt that the market is trending, right? But will it trend like they used to do, so the trend for years, or was this just it? I still think that this was just still it. I think we'll have a bit of trending markets, but it's still gonna be a sluggish one, and this one is still a bit of a sluggish market. I think where if we don't trade much higher relatively soon, this market is gonna trip and go down, and then we'll be stuck again between 106.53, and then maybe from down here some people might look to buy. So for now, I don't worry too much. I'm just gonna leave this the way it is. There's not too much to say or do here, but obviously there's a bit of a risk here where something does not want to go upwards. It'll eventually trade lower. So this is the dollar versus the Japanese yen. Let's move along here and we'll take a look at the price of crude oil. So this is crude oil, and over the last few days I've been saying that some people are going to be buying here at 52.97, and people did buy, went up, and then went back down again. No change to the outlook as long as shared above 51.32.4. This is a bullish trend. S&P 500 as well remains remains in a interesting, well, not very interesting, it's actually very boring. It's within some sort of wedge pattern, and the market is really struggling to trade lower. It's turned very neutral here. Soon this little section here by itself is going to be a pattern. Not that it's necessarily tradable, but at one point it will either break up or down. My general idea is that people might still sell here at these levels and then push it down. And if we trade above 15.19, this short-term trend will be over, and I think at that point we'll go up, down, and up. Eventually, I do think we're going to go up. S&P 500 remains really, really strong. So I had to lift this. I had a little buy section here. Fortunately, we missed that out, so I lifted this. and the market is just at this high here. The next high is here, and then it follows along like that. And I think here, at least in the short term, we can probably, what we're gonna do is just gonna reduce stop a bit. And I'm using the 1 hour chart here because we're using the bigger picture chart. This market is so stretched that we're not gonna have any, I don't think we're gonna have a very good opportunity here. So what's gonna happen here is that either this market is gonna play nice and it will just continue to sort of slowly move upwards, and then what's gonna happen is gonna have a big shock, and then that big shock is just gonna cause the price to cut straight through everything. And the thing here is that we are in a situation where I do think it's time to start to assume that that's going to happen, because on the daily, you know, we're moving up to these important highs, as you can see up here. We need to take those out, and RSI is not necessarily overbought yet, but it's getting there. This is definitely a bit of a tricky situation, but let's see what happens. I think if it goes down, you know, this little spot here is the 29.91 level, so that could be something. And this is the German DAX. So the German DAX, I turned bearish a few days ago. Why did I turn bearish then? Well, if you look at this, this is your daily chart. This is your pin bar, and that's a bearish candle. So below that thing, there's a heightened risk that we trade slightly lower. As well, if you look here at your RSI, we clearly overbought. And again, you know, most of the time nowadays, the market goes above a prior high, stays there for a few days, and then just tumbles lower. Of course, we're getting, you know, positive vibes from the world leaders. The people are quite optimistic, but I think in general here, I think it makes sense to be a bit careful here. The trend though is, you know, telling different. So the trend remains bullish in the short term. We went straight through that little sell area, which was nothing I really was hoping for. And I think if the market does indeed go above this high, it will probably go up a bit, and then we'll go down, and I'll probably look to buy on dips. If you do want to sell, you know, there's nothing wrong to try this out, but just understand this higher failure risk. And then if you were looking for like a safer sign that the market turn around, that will be a break to 12,599. And that guy concludes today's market update. On the economic calendar, we don't really have, let's see, I pressed the wrong button there. On the economic calendar, there's not too much going on today except Brexit. Have Mexican data coming out at midday as well, so that could be something. For more information, if you want to keep tabs on what I'm up to, don't forget to check out the Investing Cube. On the about, you got Investing Cube authors. You can find my page, which is Investing Cube /author/Alejandro Zambrano, and you'll find the page here for my content that I produce here. As well, we have a new writer on the team, so we have a lot of content now in the morning. So make sure you join us, publishing a lot of content in different sections. You got the latest articles up here. If you just arrived and you want to know what's happening, like right now, you got the Forex section. Of course, if you click on Forex, you'll read more news. You'll find the same stuff here. You got the commodity as well section here, and then you got the indices. You got your cryptocurrencies. And then you have the latest updates down here in the bottom as well. So check that out and let me know if you have any questions. Have a good day, and I'll see you guys tomorrow here on the morning update. Thank you, and bye bye.